In this video, we're demonstrating a commission tracker that you can utilize in your real estate business. In this first tab we have is a production focused tab. In the top left corner, we have the ability to set goals and track our actual results against those goals for any 12-month period. In these yellow boxes, you just simply enter your goals that you have, such as the number of transactions, your total sales volume you would like to see, your total gross commission income, the percentage of listings as it relates to buyers and the total units. So if you are targeting 50-50, you would want to see 50% of your transactions coming from buyers and 50% coming from sellers or listings. Then we have the average sales price, the average commission percentage that you're able to charge and that you're charging on your deals, as well as how long it takes to go from a pending status to closing status for you. And this number here sort of represents your cash conversion cycle, or in other words, how fast you're going to be able to get cash once you have a deal that is considered pending. You can use these numbers here, your actual numbers in your business plan, when you go to create your business plan for the next year or the 6 months or whatever time period that you're looking at, rather than just estimating, pie in the sky numbers. You have actual numbers from your real estate business that you can plug in to accurately set and create more realistic goals when it comes to, number of transactions, your total sales volume, or your total gross commission income. On the productions tab, we have that broken up into two sections. We have a production section, which is going to tell you all of the information that you kind of want to know about your production in terms of closed and pending, but based on the number of units. You're able to estimate all of this in any 12-month period. So specifically, we're looking at a typical calendar year starting in January and ending in December. But one of the disadvantages of many commission tracker spreadsheets or spreadsheets in general is that they only allow you to track up to December, and you can't really see or project in the next couple months. And what this allows us to do is actually project into coming months by just simply changing the date. Let's say that we wanted to know our projection for the next coming 3 months. We simply enter that number in, and it's going to roll out all of those numbers for us. And so we can kind of change these dates to see where we're headed in future months, rather than being cut off in December or November and not really having a good solid idea of where our real estate business is headed. So we can see our closed and pending. We also have it broken down into volume. This would be your production volume here. And then we have it into a current and projected gross commission income, and then a current and projected income, which would be the income that you're making after your broker split. All of this production number, as well as this GCI, or gross commission income by our channel. So we can also look at the production that is coming from each different channel. And all of this is built by our sales input tab here inside the tracker. And anything with a yellow color are numbers that we need to fill in, or is information that we need to fill in. The blank cells are auto-calculated here. And green cells are optional. This would just be, you would just use this to track your deals. So you could use like your, the client name or the client address. Now the net income tab isn't auto-calculated. You will have to punch this in and figure it out yourself. The reason being is because it would be too difficult to calculate the net income with the number of commission splits that are out there for the different brokerages. For demonstrative purposes, we just made it a 70-30 split if you look at our function. And then we didn't consider anything else like real estate caps or anything else that typically occurs and is becoming more and more common at different real estate brokerages. And so you can see that we're able to compare our production by channel as well as just overall production. And then that's broken up into a simplified actual information, like actual numbers for business planning purposes, and then as well as reviewing some of the information in a visual platform such as our gross commission income broken by our sellers and buyers, as well as income by month. The next tab that we have is a money tab, which is going to allow us to sort of keep track of our net income and our cash and estimate taxes. The biggest thing is this table or this tab is going to allow us to estimate when we might, for example, run out of cash or when we may run into some cash issues, which is extremely important in the first couple of years of our real estate business. And this tab is built from our expense forecast tab here, where you just enter in your categories. Then you enter in your start date. In this case, we're just going to examine on January 23rd or January 1st, 2023. We recommend that you have your start date at the calendar date or whatever tax year that you're examining, because the tax calculator, the tax estimator, is based off of that 12-month period for taxes. So you're going to enter your categories, and then you're going to enter in your expenses. You can enter in for future months. At the beginning of the month, you want to enter in the future expenses. We recommend entering in at least 3 to 4 months, but you could go all the way up to 12 if you wanted to really see how your cash is going to be affected throughout the year. And as well as you can, as the months pass, enter in your actual expense data to get an accurate number for your net income. So we'll give you an example that let's say that it is April 1st, 2023. We're going to want to enter in under the expense category our projected expenses here for April, May, June, and possibly July. And we're going to want to make sure that we fill in the back information for our actual expenses in March and how much they were. Now, you could do this in a simple way or a little bit more of a complex way. You could potentially add in all of the different categories, or you could just take whatever number or enter in, maybe if you're using an expense tracker spreadsheet, or if you're using something like QuickBooks, you could enter in your total expenses for the month, and then it'll just drive it to the bottom. You don't have to worry about breaking up the expenses into the different categories, and that's only for the expense. I would recommend only doing that for past months rather than for any future months. In the future months, you might want more clarity, but you could also do that if you wanted to do it for the future months. Is just enter one whole round number and it'll auto calculate for you. It'll auto calculate your net income so you can kind of see how much money you're making or losing in any given month, based on the comparing that to your projected income and then to your projected expenses or current income and current expenses. And then where this is important is it drives all the way down into our cash flow projection section. And so if we scroll on over, we can see that, let's take the date of August here. So you're going to take the date that you're comparing. Let's say it's August 1st, and we want to know what our cash is going to look like in the next coming months because it's August 1st of 2023. And so we enter in our starting bank account balance. Let's just say it's a round number of 25,000. And then it's going to take our net income, our projected net income for August, our projected net income for September, and our projected net income for October, and our projected net income into November, and give us an ending cash balance. And so in this case, you can see there's not a whole lot of issues if this is the amount of cash that we have. We're not going to run into any necessarily issues. And this just gives us the ability to kind of plan if we're going to take in any additional expenses, or maybe we have some large purchases coming up, or we need to, have some cash set aside for savings or reserves, or we want to take money out of the business because this assumes that we haven't really paid ourselves. But you could see that, okay, I could pay myself maybe, let's say we always wanted to have $25,000 in our bank account. We could see that we would want to pay ourselves about $10,500 at the end of November, and we could realistically do that. And if we take out anything more, we may find ourselves short on cash and then have to put money back into the business. And that's just a erratic cash flow cycle that's all too common that we see in real estate. And then let's just say that you wanted to actually, let's say you're a new real estate agent and you don't have a whole lot of expenses. So we kind of want to model out our income. So we could model out what it might look like if, for example, you were trying to see how how your cash would be affected by not having any income when you're starting out. So let's say we just started in the month of January and we don't have any income projected because we're a new real estate agent and we know we're going to spend, a certain number of dollars on desk fees, marketing fees, and those sorts of things. And let's say we fund our business with $500. We can see at the end of the month in January, February, and even into April that we're building these negative dollar amounts. And this negative cash balance has to be funded somehow. In other words, we're going to find ourselves putting in, $3,400 into our business, whether that's through debt, such as putting, growing balance on a credit card, or that's us taking money from our personal bank account and putting it into our business bank account. And you can see that we may need to find a way to make some more money. Otherwise, we'll run into some issues. And lastly, on this tab, we can also look at our estimated tax withholdings. Now we have two different methods. We have a simplified method and a little bit more of a detailed method. Both these numbers are based on industry averages and best practices. Of course, it may not be a great estimator for your specific tax situation, so we do recommend consulting with a tax accountant or a CPA to make sure that this withholding is the correct amount for you and your real estate business. But essentially what we're doing is we have two methods, and method one just takes the total of our commission income and it multiplies that. It's going to multiply that by 30% withholding rule, and it's going to calculate a number for every month and give us a quarterly rate. This quarterly rate is the amount that we have to pay of estimated taxes every quarter, because as a real estate agent, we are considered independent contractors and self-employed, so we are responsible for making payments to the IRS and to whatever your local, state, or city tax is every single quarter. And you can see that's projected out every year. And then we also have the second method, which takes the net income and it does the same thing, estimates our taxes every quarter to give you that number. And the reason so which one is kind of the better method for you is it's going to depend on your situation and where you are in your real estate business. For real estate agents who are eating up a lot of cash, we would say, in other words, they're not making a ton of money in terms of income because they have a lot of expenses, they're trying to grow their business, or they're just getting started. The percentage of commission income tends to be a way overestimation and you end up withholding way too much in taxes. So the second method is likely to be a better method so that you can get your cash and access your cash today rather than making large payments to the IRS and then having to wait a whole year to get your payment refund from the IRS. But definitely consult with a tax accountant or a CPA to figure out which method is the best for you. These are just some guidelines to give you a rough idea and a rough estimate so that hopefully you limit any surprises that you may have during come tax time and come tax season. Lastly, we'll just show you the dashboard tab. It takes some of the information and visualizes it. Here we have our gross commission income, our income by month, and then lastly our net income, which is just a visualization of kind of the income that we're going to make. And since we're often doing cash accounting, it's going to also show you where and what months you may have a negative cash flow. In other words, where more money is going to leave your business than is coming in. So we definitely want to see these green numbers instead of what would happen is you would see some red numbers, which we can model out here for you. If you look back on the dashboard, we can see these red numbers. This is when money is going to come out of our business instead of more money coming inside of our business. And that is our commission tracker spreadsheet.